Good evening, I'm Giuseppe Basile, I'm the analyst and trader. You can find at the website www.fibstalker.com, and if you are interested, you can also find me now on www.fibstalkertrading.com. On that website I have also my coaching program. If you are interested, you can have a look at that. Today is February the 1st 2015. It's 11:30 p.m. time in Toronto, GMT minus 5 EST time. And um, in this video I'm going to review for you the 13 markets I follow, and I'll start from the euro. This video is only for my subscribers. If you want to receive this video, this video review on Sunday evenings, you can just subscribe my newsletter. You can go on the website, and I'm very happy to send this to you. My analysis is based on framing price based on price models with which I model algorithms that are very effective in modern markets. So let's start from the euro. You will remember that 2 weeks ago we had a very important development on Friday. It was on Friday of the weeks before the last, and this 112.15 14 level here appears on the downside, and that was an indication for us that this whole area of potential support that actually has provided actual support in 2010 and again in 2012 is now gone. So this means that this market is controlled by bears at the moment, and the last measured move we could identify here is the 139.67, very high level time frame here, and a first target here it's 108.962. That's one of the reasons why I believe that this market could still be pushed 1 week or a couple of weeks down into the level before profit taking could kick in. Of course, this is there's here a potential for an extension long, and this market could just continue moving lower, especially if Draghi's intentions of continuing the LRTO are serious. So that's what price action in the last, basically in most of 2014 has been suggesting for the euro. So when we move to the daily time frame, we can see that this market at the moment is actually traded is actually trading along here. I would not trust this long immediately for the fact that this long did not come as a result of a strong support, but it came as a result of price piercing that 61% line that I showed you before, and that's always an important development for profit taking. So at the moment the market I will not get involved in this market. This market could actually continue lower. There is still a first target on the weekly time frame. Moving to the SP500, the SP500 has been moving laterally on top of this support 1967 here. Has been tested mid of December last year, and this market has been moving laterally. Eventually is going to resolve this lateral move before and after, so don't think that this is going to stay as it is here. And um, apparently there could be bear sitting control on the daily and 4 hour time frame, and I would only get involved in this market if it gets again back into the 967. That's a safe level to trade, has been respected and participated once. And if this market gets into that 1965 and then breaks the sequence of measured move, and I studied the sequence of measured move using the Fib stalking timing technique. If you want to learn more about it, you can go to www.fibstalker.com com. That's my blog, and there's a lot of information there. And I have over 500, almost 600 videos on YouTube. I've been doing this analysis in the last 3 years. Moving to so not really nothing to do in this market on the larger time frame. We know that the SP 500 is still in a cycle long, and the first target was at that 2095. The first contract was 2100, and this market didn't get there, but I believe it's going to get there very soon. Moving to the dollar index, uh, we know that the dollar index has the potential, and I would say almost the certainty here to get into 100 before or after, but we will get a retrace, and that retrace will be an opportunity for a profit-taking rally in the euro, and this could happen before or after this market gets into this 100 level here. But potential level of resistance for the dollar will come, might be much higher at 104.78. So nothing to do at this stage. This market has not retraced just yet. It's moving in extensions higher, and if this market retraces deeply on this daily, sorry, on this weekly time frame, this market could retrace into the 92.83. But as you know, I don't look at the dollar index for trading. I prefer to look at the single pairs. Moving to the gold contract, we know that gold is moving in the last 2 to 5 years, and very evidently in the last few months, gold has been moving along with the Europe balance sheet, the central bank, the European Central Bank balance sheet, and not the US balance sheet. So at the moment we are seeing gold reacting on top of this area of potential support, which starts at 1230, and this would suggest that the euro, Draghi, and the central bank are actually have the intention to actually continue the LRTO. We saw also last week an extension higher here working. So if this level, the 120, the 1260.5 here is retested, there is the potential for this market, if the sequence of measure move fails on the counter trend sequence of measure move fails, there's a possibility for this market to bounce into 1332, and that would be the first target, but with the potential to continue higher, which would suggest that again Draghi is actually serious about continuing to rebuild the BCE balance sheet. Moving to the US dollar versus Japanese yen, this market has been extremely technical, extremely liquid, of course, because of the injection of the QJE2, the quantitative easing, and we know that this market is neutral on the weekly time frame. The weeklies are waiting for this market to retrace all the way into 112.83, but the on the daily, as we can but we can see this on the weekly time frame as well. On the daily we had algorithms picking price at this level 105.41, which I gave with more than 1 week in advance, and bringing price into first and second target, and then a continuation higher, and again with more than 1 week I also provided the next area of potential support here, which was timed using the Fib stalking timing technique. So this level, the 111 116 here, has been tested once and twice, and this market is now coming back to retest that level, and in fact we can see there is participation on the short side of things here, and that's much more evident when we move to the daily time frame, and I have it already traced here, as you can see, in all the last week and part of the previous week. This market has been actually sold at this a 118.37. This setup as a first target right above that 61.8% level. If price gets below that 114 um, 57, 56 there, then we're going to see that price into the level that with the weeklies are looking at, which is that 112.80. So at the moment we have support on the daily, on the 4 hour we have resistance, and this market will keep moving within this area until I believe this 114 level will be pierced on the downside. The euro versus Japanese yen is behaving exactly uh, foreseen, and the reason was very simple here, because the sequence of measure move in our last extension long initially was respected. At some point the bears actually pushed this price below the 134.64, and I mentioned that we could see this price at this first target of this basket setup, but eventually then this market had to come to trade potentially, and I believe that's where we're going at the moment, the all the way halfway back, which is this level from lows to highs into 121.99, and that would be 122. That would be the level where we are going to see this market correcting into. So if you are short, this market should actually stay short until this market gets into this 122 level. Moving to the pound versus Japanese yen, the pound versus Japanese yen is just moving in extensions on the weekly and daily time frame, and the sequence of extension is very clear here. Participation at starting at 165.78, the stop here 163.63 is also a price discovery level, which is a technique that is enabled by applying the methods, the models that are used to frame price and frames algorithms activity on price, what I call the footprints on price. Now, as you can see, the setup at 165.78 brought price into this first target 179.09, and then there was a retracement. Where that retracement went, well, it went into the next measure move, and it's where we knew, according to the rules, algorithms could actually bring that price into. And as soon as price got into that level, again the market went higher and went to trade into that first target, and again we are going to reuse the same trades and the same rules, and so I'm anticipating this market to continue lower into the 173.20 level here. And at the moment there is one of our canonical patterns that I teach to my students that is actually working and is actually pushing price into that first target, the 170.77, which would also be the corresponding to that area of potential support here for a continuation high. There's no reason to believe at this stage that the pound is going to continue lower. Only if the 169.27 is breached on the downside, then there is a possibility for this market to continue lower. But at the moment, it's an extension short on the daily time frame, and has yes the potential to get into 170, 170.50 here. But it's possible that let's see participation at this 173.13 as well. Moving to the EuroCAD has been one of the markets and one of the best call probably in May, since May last year, and we saw the sequence of measure move lower here, and there was from highs to lows, which progressed into the first and second target, and then from lows to lows we were able to capture the other measure move here into the first and second target and look at the profit taking that came at the second target, which shows that algorithms are real. And the next measure move failed actually, but the market actually went to trace and trade into that first target. That's a busted setup, and eventually even the second target. However, I would have not get involved along here because I mentioned at the end of May that we probably see this market trade into the 138.50 level before we could see a bounce higher, and we saw a fantastic bounce higher last week, which actually showing strength of the euro against the Canadian dollar. Now, will this continue? Well, we don't know that. There is the potential for this market to trade all the way into the 147 146.71, and that would have been a very good trade here, which offered the opportunity for two free risk trade and adding here at this level again. And so it'll be at 38.50 to 46.70. It's more than 800 pips here, so it'll be very good, very good trade here. Moving to the pound versus the US dollar, I'll show you on the weekly time frame that this market is well into an area of potential resistance here, support here, and it did not go below the 149.18. If that happens, then this market, if we look at price history here, has the potential to go and trade all the way into the 135.50, but likewise the euro and actually we know that pound and euro, the pound, sorry, the UK economy is very much linked to that of the euro. So what I want to show here is that there is the potential for this market, which had participation at this 169.67, to move all the way into 118 against the dollar. Okay, and that would actually signal a continuation of this long-term short that started in 2007, which could bring price into that 118 and then even a continuation lower. The Australian dollar versus the US dollar is in a different situation at the moment and much safer at this stage. And it's actually price actually got into that very large area of potential support here, and it's hitting the second target of a multi-year short here. It was a traditional measure move which was traced from the highs in 2012 and 2013 here to lows actually, and we could see participation at that level, and we can see that now price is at that second target within an area of potential support. So I do not anticipate this price going much lower here, and it's possible that this price is gonna absorb some of the participation. This market is going to go absorb some of the participation, and there is a potential for this market to retrace at least into all the way into 82.90 level here, and we will see there if the longs that might come into this market from these levels will actually be stronger than the shorts that might be located again at this 082.90 level. And the US dollar versus Canadian dollar has been screaming higher here. I mentioned the 126 a few weeks ago. That was mentioned when the new measure move here was identified, the measure move that has been in place since May 2014, and this market is now screaming high and moving in extensions, and eventually this market will need to correct. Now is into an area of price which in the past has seen selling here. So if we are going to see selling here and we don't know that, there is no reason to anticipate that at the moment. We will actually we might see a retrace all the way into the second target of the first measure move here, and that would be the 120.37. That's the level where we could see this price correcting to before a continuation high. This may take a lot of time. If it haven't happens at these levels, if price keeps moving higher, will keep moving this trace. If it happens at this level, it's going to take a lot of time to correct, and eventually when it gets into 120.42, shorts might actually be very tired, and this market could just continue higher. New Zealand dollar versus US dollar was a surprise last week, and likewise the euro. We had an important development, and that was basically this measure move that initially worked. Now has pierced, price has pierced the level, and actually so now this price is continuing into the full range 50% here. That's the lows to highs, and that's where we're going to see this market now. um, After the fact, we identified a measure move here short, and although after the fact does not allow us to trade it, we can always use the information to actually look and trade what's going to happen as soon as there'll be profit taking in this market. So this market now has two potential levels here. On the weekly, the first one is another bull anchor here, and if the market gets into 074.54, there's a potential for a retrace, and the other level is very close to this. So actually there's a range of levels here, and it's not probable for this market to get above the second level here. I don't see it happening, the 07521. So there are a number of reasons for this market to retrace into this 07460 to 07450 level here, and then a continuation lower. So that's what that's what I'm seeing for this market. And finally, the US dollar is the Swiss franc here, and this is a clear example. Once again, I want to stress this, how important it is to control your position and risk management. 5% is way too high as a risk, and we know of a lot of people who actually were bailed out from this market and won't have any opportunity to get into this market again now, because they lost everything they had. And in this case, there is a trace from lows to new highs here, and we are seeing participation now since 2 weeks ago at this level. So if this continues, we're going to see what is going to happen at the all the way halfway back here, and that's the trace from highs to lows. And if this market has to continue lower, we will actually see participation on the short side at this 09345. And this is it for today. Thank you very much for your attention. Fib Stalker here, signing off and wishing you a great trading week this week. If you have any questions, just send an email and I personally answer to all my emails. Thank you very much and have a great day. Bye bye now.